So the ringgit currently at 4.20 actually rallied way beyond that to 4.18. It is up almost 10% since the start of the year. In fact, this 4.20 mark was the year-end target of a lot of analysts, and so far, just about 9 months into 2024, the ringgit has already blown past this level. Now, there are two main reasons to what we are seeing. And number one, there is quite a bit of ringgit strength. Yeah, when we look at currencies, we don't just look at one currency pair, i.e. USD NYR. We also have to compare it to other currencies, other currency pairs. And in this case, you can see there is quite a bit of ringgit strength. Euro MYR 4.6710 at about a 16 to 20 month high. SGD MYR 3.2440, a 13-month high. The British pound versus the Malaysian ringgit well below 6, 5.5628, which is about a 16 to 20 month high also. Apart from the ringgit strength, there is also dollar weakness. If I layer the dollar index on top of the USD MYR pair, you will see that USD MYR practically moves almost one-to-one with the dollar index. Now, dollar index is basically an index that tracks the strength of the US dollar against a basket of 6 major currencies, such as the Japanese yen, a British pound, so on and so forth. And you can see that recently the dollar has been weakening quite a bit. Hence, we do see USD MYR pair also weakening. Now, the dollar's weakness comes as the Federal Reserve has slashed interest rates by half a percentage point or 50 basis points, which is an aggressive start to its first easing campaign in 4 years. So some technical terms over here. The Federal Reserve is beginning to reduce interest rates. Why? Because inflation over the US is gradually slowing, and according to the committee, it is moving sustainably towards their target goal of 2%. Inflation over the US is currently at about 3%, which is why the Federal Reserve says that, hey, interest rates no longer need to be that high. We are going to start to reduce them over the next 1 or 2 years, because high interest rates, they will actually stifle an economy's growth. If you're wondering, why do lower interest rates or why do a reduction in interest rates lead to a weaker currency? We must first understand, what do interest rates actually control? Okay, in this case, they control your borrowing costs, most notably your mortgage loans, your new car loans, etc. And they also control your savings habits, because they influence the returns of fixed income investments, i.e. fixed deposits. So in a simple sense, if interest rates are high, your borrowing costs will be high. Your mortgage loans will be more expensive, your new car loans will be more costly, therefore, you'll be discouraged to take up new loans, or discouraged to spend. In return, the return for fixed deposits, they will be higher also. If you take a look at the US right now, the returns for FDs is about 5 to 6%. Which is pretty high, but that's because the interest rate is high also. Therefore, it will encourage people to save more. And in this case, you can actually see that it leads to more demand for a particular currency if interest rates are high. Now, if the Federal Reserve says that, oh, we are going to reduce interest rates, then in this case, the return of fixed income investments, they will gradually reduce. Fixed deposits no longer become that attractive anymore. So investors, they have to look for higher yields elsewhere. In this case, it will translate to outflows for the US dollar. That's the whole storyline. That's why you see the Malaysian ringgit rallying so much against USD. There are quite a few factors towards the ringgit strength also. I talked about the ringgit strengthening also, right? Well, that's because Malaysia has seen tons of good news recently. JP Morgan has upgraded our country's rating from underweight to neutral back in May. Returning foreign investors. If you take a look at the FBM KLCI right now, it seems like every other day the FBM KLCI is rallying one. Okay, that is a sign that foreign investors are coming back to our local stock market. Apart from the stock market front, we also have data center boom, long-term investments. Big companies such as Google, Nvidia, Microsoft, they have all set up shop or are planning to build data centers in Malaysia, particularly Johor. We also have good policy reforms. This current administration, honestly, they've done a great job. They've decided to remove diesel subsidies and take the additional money to increase the wages of civil servants. Recently, Anwar announced the biggest pay hike of civil servants, right? Where did that money come from? Well, that is mainly coming from the diesel subsidy removal, okay? So all of these things is transitioning Malaysia into hopefully a high income country. And one of the first signs of that is ringgit strength. Right, moving forward, ringgit will take a breather because if you look at any chart right now, you see such a substantial rally for this asset, in particular the ringgit, right? We do expect it to at least take a breather, retrace, because it's not a one-way trip down or one-way trip up, depending on how you see it, okay? It may retrace at 4.3 or even 4.4. However, long-term trend-wise, if Malaysia keeps up the good work, keeps on attracting foreign investors, right, we may just see 4.0 next year, being a bit conservative, or even 3.80. Okay, hopefully keep our fingers crossed. Now, what does a stronger ringgit mean for you? Well, it's time to visit and study in Western countries because, well, pretty straightforward, right? Because stronger ringgit leads to cheaper overseas costs. Imported items become cheaper. And a prime example is the iPhone 16 Pro Max. It launched at 5,999 ringgit versus iPhone 15. It was launched September last year. That was when the ringgit was at the 4.7 territory, which is why we see it being slightly more expensive, about 500 ringgit more expensive compared to the new model. Okay, next up, overseas investments, they will also become cheaper. Well, gold has recently rallied to a new all-time high of $2,622 an ounce. It is up 26%, over 26% since the start of the year. And if you take a look at the ringgit, right, with it valued at 4.2 against the dollar, 1 gram of gold is 388 ringgit. But in fact, Malaysian spot gold prices are much lower at 354 ringgit 52 cents. But if the ringgit was still at the 4.7 territory, gold will be about 10 to 15% more expensive for us right now at 435 ringgit per gram. So that's just, the tip of the iceberg when it comes towards when it comes to the benefit of the ringgit. Lastly, the confidence in the ringgit will increase, which I discussed quite extensively just now. Good news. It's a feedback loop, basically, that the government continues to introduce proper policies, attracting foreign investors, ringgit becomes stronger, confidence increases, so goes the story. Okay, but let's come back to the ultimate question. Why is the cost of living still so high? We don't see our grocery bills getting any cheaper. So I directed this question to RinggitPlus founder Hann Liew, and he said that this depends on several factors. Yeah, number one, whether the goods are produced locally or not, and whether those local goods they have a foreign supply chain or not. The first example, let's take a look at this. Locally produced goods that do not have a foreign supply chain, those like rice, fish, and eggs, right? No matter how much the US dollar weakens, they will not impact this side. Okay, so weakening dollar, no impact on the prices of these goods. If you take a look at locally produced goods that have some foreign supply, i.e. soybeans, corn, feed for other chickens and meats, right? Typically, for our chickens and beef, right, we import our feed. So it's heavily impacted by the strength or weakness of the dollar. If we do see a weakening dollar, that will lead to cheaper costs for the farmer, but this will take some time for prices to reduce, roughly 6 to 8 weeks. Then we also have foreign-made goods or imported items. This one I talked about just now. A prime example is the iPhone 16 Pro Max, right, which is about 500 ringgit cheaper compared to the older model. But when it comes to other imported items, companies, they tend to readjust their prices monthly or even quarterly. Yeah, they can't afford to readjust their prices every day, okay, because it's simply a lot of work to do. So we may just see price reductions for other imported items in the coming months, okay. And lastly, which will actually influence all of the three factors I mentioned just now, is actually sticky prices. Okay, and it's pretty straightforward. It means that prices go in one direction. They are very easy to go up, but very difficult to go down because of this stickiness. Okay, and the example is food menu. If let's say a restaurant this year they come up with a new menu, they raise their prices by on average 5 to 10%, but now halfway through the year or 9 months through the year, the ringgit has strengthened by 10%. There's no way that the restaurant is going to say that we're going to create a new menu and make things cheaper. Right? In fact, next year they're probably going to create a new menu and keep prices constant. Okay, so that is literally sticky prices. Okay, and it will not necessarily translate to lower living costs. Because at the end of the day, businesses want to make profits, right? But with the ringgit strength, it will hopefully sort of like reduce the price increases of all of our items or slow down the pace. Okay, so yeah, tons of good news for Malaysia, and I believe that if the current administration continues to do what they do, probably we'll see the ringgit going to the 4.0 mark by next year. Based on previous trends, how has the US election results affected the market? So I haven't done a research on this, but I can tell you what does a Trump election mean. When Trump wins, what does it mean? Okay, so Trump is a supporter of low interest rates, more tax cuts, and cryptocurrencies. Okay, so if Trump were to win the election, we're going to expect stock markets to continue to rally because he's a supporter of low interest rates. And he also publicly stated that he supports Bitcoin previously. So we do expect uptick in Bitcoin, in demand for Bitcoin as well. But Trump is very against green energy. So those green stocks, probably EV stocks and other solar energy vehicles or whatsoever, right? These will not perform so well, okay, if Trump were to win the election. With the USD rate being lower, do you think luxury brands like Rolex, Tudor will reduce or adjust their prices? Or will they maintain their pricing since they primarily target middle and upper class buyers? In contrast, do you think more budget-friendly brands like Nike, Uniqlo, Adidas, which cater to a wider audience, will adjust their prices accordingly? That is a fantastic question. So I think those luxury brands, they are unlikely to reduce their price. Okay? They'll probably keep their prices there. They won't increase their prices, but they're unlikely to reduce their prices. But when it comes to budget-friendly brands, Nike, Uniqlo, Adidas, we will probably see a price reduction in the coming months. And like what I discussed just now, since companies, they readjust their prices monthly or quarterly, in this case, I think Nike is probably quarterly, most likely quarterly, then we will probably see it in the next few months. Okay. For those whom have investments in USD and SGD and see their assets depreciated by 5 to 10% to MYR during this period, how will they be able to navigate through these losses? Would the best approach be doubling down by converting more MYR into respective weakening assets to even out the losses? Okay, this one entirely depends on what your portfolio needs. Okay, if you're asking this question means that you don't really have a direction within your portfolio. You don't really have like a fixed percentage for each asset within your portfolio. For me, what I do is I denominate my portfolio in MYR, because we're staying in MYR, right? But I do have overseas investments. I do invest in the Sing dollar, US stock market, Singapore stock market, gold, which is priced in USD also, right? And in this case, I fix a specific percentage for each asset. Maybe 5% I put in USD, 5% I put in SGD, right? Then 20% I put it in the US stock market, which is probably an ETF that tracks the US stock market, right? In this case, when you see the ringgit performs, which will squeeze the profits of your US assets or SGD assets, right? You can see that the weightage of these assets becomes slightly lesser or lesser and lesser. That will prompt you to invest more into these respective assets. Okay, so short answer depends on what exposure you're looking at. If you're looking to have more exposure in US stocks, then and right now you're underexposed, then the best time to enter the market is right now, even as the ringgit has strengthened significantly over the past few weeks or months. Shout out to all our gatherer members: Andrew, Wendy, Alex, Cici, Is, Urshad, Caveman, Kelvin, Tommy, Jinkang, Adrian, JS, Wenyan, Dean, Duhan, Sufi, Faris, Alan, Jackson, Rizan, Hudson, G, Jeffrey, Lawrence, Lukman, Will, Jack, YC, Arif, Hazik, Jinden, Adam, Ashley, Sean, Jason, Putra, Alvin, Jaya, and CH. Whew, that's a bit of a mouthful. As well as all of our learner members, really thank you all so much for your support. Bye guys, stay safe. Good night.